Hello, everyone. Welcome to this earnings season. Today, we are the 28th of January, 2025. And I would like to go over some of the tools that many of our users are using for this earnings season to detect key stocks, stocks that really outperform for this week, this month, this quarter, and maybe the next quarter. Those tools are truly unique. You'll find it on epsmomentum.com. And yeah, I just want to give you a quick ride on the product here. So maybe you can see my screen now. So let's get started. So the app is organized in widgets that you can basically turn on or off very quickly, P ratio or matrix, and so on, and just display the value that you would want to see. So there's many things out there. There's a chart and there's a screen at the bottom that you can use for filtering. So let's go over the basis of EPS momentum, usually based on something unique, and this is what we have here. So the earning momentum model is, and you can see it on the EM here on the screen, is based on earning per share and sales, absolute momentum that you can track with many of the metrics that we have on the system. But the important thing to remember is that EM score is contained between -50 and +50. It tracks, as you can see here, earning per share, sales, momentum, breakout, all of the above, and any stock that is above 0 is great. Any stocks that has an EM greater than 20 is absolutely out of the ordinary and exceptional. So for you to notice. So the nice thing is you have it on the chart, that number that every quarter paints a picture of the earning momentum, and also relate on the chart. So you can see on the chart as if the stock is going up or down, or trending up. So that's the earning momentum piece of the model. The second part is the timing momentum that we see here. Timing momentum, timing bias, market score. All those things are three variables here that have to be above 0. So for example, we can take the green, blue, and yellow here. If all above 0, then that would be a good day to get in. And we can see that after that, it kind of rallies. So what is it? So the market score is the ratio of the stock to the S&P, to SPY ETF. The timing momentum is a combination of market performance, moving averages, distance to high, and so on. And the timing bias is a 3-day window of the green. So it tends to be really oscillating fast and keeping you out of trouble when the timing momentum is declining. So when you have both a good stock and a good timing, you kind of have something that you need to spend your time on and study. So as you can see on NVIDIA, we get a very extremely high number, EM30, EM33. It used to be negative a couple of quarters or years ago. But as you can see, it was very positive, 31, 37, 33, and then -8, -11, -9, and then it turned 24, and we get that rally here. Okay, so this is really the basis of the model, and something that you need to understand first to get going. There is a bunch of videos. Every time you see this triangle here, you can watch this video and it plays out in front of you. So it's pretty handy. There's also 14-minute videos here to get started. So it's pretty self-explanatory, although it might be intimidating at first. But let's delve into what's really important. So here we have a name that has an EM33. How do I look? So this is overall a red light, but there's a green light here and a red here. The reason it's red is because the timing momentum is not at all in its favor here. NVIDIA dropped literally 17% yesterday. So recovered a little bit today, but still not looking good. So it's not a good timing. A great stock, but not a good timing. Okay, so that's great. So what else can I do? Well, I want to look behind at 33 and really understand the earning per share. So the earning per share was 0.4 last year, and it's 81 this year, 0.81. So which is 103% growth, and somewhat of a deceleration. It's decelerating, that's for sure, but truly outstanding and amazing growth here. When you get companies growing 5% or 10% a clip, this company grows 103%. So it's truly amazing. The other thing that you want to look at is the revisions. So the revisions are, I'm going to shut off those two curves here and focus on just one source, the revision score RS. So this is all the estimates and the analysts revising their EPS estimates for the company. And see, it's been flat. It's not the beginning of the quarter. We're at mid-quarter, I would say. So they're almost done with their revisions. Maybe they'll have more. But we can see there's not much going on here in the past few days. So revision is very important. And we can see on another name, for example, Goldman Sachs, where we were on revisions. Revisions here on Goldman Sachs. This is truly amazing. Look at this. Goldman Sachs revision, it's EM33, and people not only jumped out the day off, but people have been revising up Goldman Sachs since earning, and about 84% up for the revision score. So you can look at the revisions. Revisions were up 57%, 25%, really big revisions. So that's key, and hence the stock price going higher and higher. So that's very, very good and important. Now, where do I quickly find and filter for all the stocks that are in that situation? So I can click on revision winners, and I can click on last reporting here, and that will bring me to the screener, and it will bring me all of the last reported stocks for a specific metric. So this is the last reported date, right? So I am going to, since we're on the 28th, I'm going to make 26 days reporting. I'm going to get EM greater than 20. And I have a few stocks here. The other thing that I would want to do is I want to see the price change, which is here. Price change is the last earning report to be positive. So I want stock that are going up since the beginning of the quarter. Pretty easy. Now I can go into any of those fields here and click on estimates revisions. Click on this field. The important fields are in red here, so it's easy to capture. This is a percent change of the revision score since the beginning of the quarter, the actual earning quarter of the company. So I'll click on that and now have the revision score, revision score percentage increase. I want it to be positive. So I filter on positive, and here I have all the names that have positive revision score, great EM, and reported 26 days ago. So I can click on BlackRock, have a look at this, and BlackRock is EM26, definitely up there. I can see the growth. It's been plateauing. Maybe it's going to break out from its base. And if I look at just the revisions, really increase in revision by 16%. The matrix is 23% up, so the growth is 23% up, and the acceleration is 18. So accelerating and growing, this is what you want to see. And for sales, 23% up in sales and 8% acceleration. Again, something truly interesting and amazing here. So that's good. Let's carry on with another name. For example, Goldman Sachs so far has been doing terribly well in earning per share. EM is 30. We can see growth in earning per share of 118 and sales 23%. So pretty amazing sales and acceleration. So that's what you want to see. As far as the revision, we saw earlier, everything points upward. So truly a winner here. Let's have a look at the drift. So the drift is a very different concept. What we do is we take all of the drift. We take all of the quarters that you see in history. You know, we have 36 quarters, almost 40 quarters. It's actually 40 quarters we take into account. And we bucket them into the market reaction on the first 24 hours of earnings. And we get drift A, B, C, and D. So you get positive underreaction. Drift B is positive overreaction, negative overreaction, and negative underreaction. So drift A is positive underreaction. That means that on average, the stock moves up 5%. The accuracy is 80%. So 80% of the time it falls in that range. So granted, that range is pretty wide, but still useful. And we can look at the history of it. And we can see that in history, we can see it was a drift A 2 quarters ago. It fell almost spot on. It fell there, here, and it was always in here. So it's pretty impressive. So that drift really is giving you a cone of where the stock is going. So if we look at other stocks, for example, Bank of California, we get EM23. It's growing. The drift is pointing to a $16, usually kind of flat for the quarter. It was not a drift A, so it's kind of be more flattish. But we can look at the revisions. Revisions been up, but up a lot. But recently, in the last few days, maybe with a correction. So let's carry on with the screener and have a look at another name, Lactal Education Group. Great revision, great earnings, EM24. Let's have a look at the earnings, 60% growth, acceleration 12 in sales, earning per share 250% growth. It went from negative to positive. That's what you want to see, 150% in growth. So really the stock is, something's happening in the stock here. So yeah, I mean, this is something that you want to see and notice and filter for. Now, the other thing that you can do is, well, first I can increase the market cap and I decrease the market cap, be less stringent. So I get a little bit more names, Simulation Plus. Going into the small caps here, small caps EM20. That's good. It's kind of growing fast, accelerating. Sales, accelerating as well pretty nicely. And the revisions, again, accelerating, very good, very, very good. So taking it up a notch, what we can do is we can look at the stocks that are going to report in the next few days. So then we switch to next reporting date instead of last reporting date. And the next reporting date, we will filter for stock that report, let's say, in the next 7 days or 8 days. So we got Palantir, we got KKR, we got Deckers. So what we want is we want EM positive, right? So let's be not that stringent. Let's make it just EM positive. So somewhat of a good earning momentum. And what I want to see is revisions, positive revisions since the beginning of the last quarter. So let's have a look at Palantir, for example. We get revisions from the last quarter that is positive overall, 43% up. So that's great. And we get the stock. The stock is definitely up as well, like a lot. EM29. So it's really on there here. So now what I want to do is I want to look at the revisions, but in the last 7 days. So this is, this is the recommendation. This is the revision last. So this is the last 7-day change in the revision for the stock. So I'm going to click on that and see if I get some positive numbers here. I'm going to sort. So I have about 10 stocks that have really positive upward revision before their earnings. So Stifel, financials. All right, look at this. So this stock is a few days before earnings, huge revisions, right? And, something's happening here. Something's happening, and that is pre-earning, and the stock is on an upward trend. So we either get a breakout before earnings, and that would be pretty impressive, or something's cooking here. Some people know some things, right? So LPL financials, let's have a look. Great earning revision in the last few days, also positive revision, except that last day. So really had high up there. It's great. What else? We can look at Badger Meter. Yep. So this is one good one. Badger meter is up 20% for the revision. So really, really interesting and important. So what I'm going to do is Bowhead Specialty Holdings. Let's have a look at this one. Positive revision as well. So again, very good things to filter for is the revision in the last 7 days just before earning. So this field is very important to give you an idea of where things going. Now, what we can do is we can go back to Goldman Sachs and then have a look at the option market. We're going to look at the option market, the skew slope. And the skew slope is basically, let me remove all these things. It's telling you where the skew has been over time. The skew is very low. So the skew is the difference between the puts and calls. So if it's high up, puts are expensive. If it's way down, puts are cheap. And it's basically calls are expensive. So calls are expensive here. So it's kind of neutral, but on a 90-day, it is bullish, right? So this is important. You get the option market. It's telling you a little bit of a bullish trend there. The implied vol, if you go into 30 days, the implied vol is 47 percentile, so pretty flat. And the skew is 2 percentile, so very low. So if you don't know what the skew is, click on the video here. It's really self-explanatory and goes into a lot of detail about the skew and options. But you can filter in the screener for skew and options right there and the volatility. And then you can filter for skew level or, skew signal or status. So for example, the skew slope status 30-day. And we can look at the ones that are, both bullish and very bullish, right? And so what do we get? What we get all these names. So General Motors here is very bullish, okay? The option's very bullish right now, so the call is expensive. So stock just dropped, so maybe like a turnaround is priced in on the option. So let's see if that happens. So anyway, so these are a couple of tools for you to experience or use and play with. You can, you'll see the big difference in your stock picking when you're using all those tools. If you put a get daily notification here, a check mark in that box, you'll get an email in your mailbox every day of the best stocks, of the open trades, of the revision winners. Just put an X here, and you'll get automatically an email sent to you directly in your email box for you to spot what the best stocks are for any given day. So very quickly, I click on best stocks, and here I am. I have the best stocks that I can find here with earning momentum, and Goldman Sachs is back in there. We get ServiceNow, we get some Palantir. Really look at ServiceNow, really up there, making high ups. So yeah, I hope it was useful for you today. And there's lots of other things that we can talk about today, but I wanted to give you a little flavor of the tools that some of our users are using. We are going to do additional lives this week and next week, and some webinars for people who sign up for the service. You can subscribe. It's pretty affordable. Actually, it's really a steal. And we're running 50% off right now. So, have a go. Give it a try. You can full 7-day free trial, even without a credit card. And off you go. You can try it out. And you should be equipped very nicely for earnings season. That's it for me. Thank you very much for your attention. I hope you liked it. Send me a little like in the chat, and then thank you again. Thank you guys. Bye bye.